Everyone talks about dividend ETFs, but SCHG quietly did something way bigger with a $100,000 investment. And honestly, most people completely missed it. While investors were chasing yield, SCHG was stacking real growth year after year without the hype, without the noise, and without needing massive dividends to carry returns. In this video, I'm going to show you exactly what happened if you put $100,000 into SCHG back in 2017, how much it grew, why it performed the way it did, and what this means for long-term investors going forward. Let's get into it. Welcome back to Simply Money. Today we're looking at SCHG. We've been looking a lot into the income-focused ETFs, a lot of the high-yield ETFs, and I've shared a lot on my portfolio with the income segment of that. I wanted to show you a little bit of backtesting with SCHG for those who are interested in growth, those who are not into the income-focused and want growth. And especially those who are younger and have a lot of time ahead of them, this is a great way to go. Growth is an opportunity, and then rotating into more of the income later as you get closer to needing that income is a good thing. A lot of people will try to do that. It's a good plan. What I want to show you today on our back test is on March 1st, 2017, if we had bought $100,000 into SCHG. Now, I know, again, a lot of people will be like, why are you using $100,000? Not everyone has $100,000. There's a lot of different reasons, but don't forget, if you have 5,000 or 10,000, the percentages are going to be the same. I'm just showing you a number that a lot of people want to see and why that can show you the growth in a more meaningful way. But it doesn't matter. If you put $1,000 in 2017, the results would be the same percentage-wise. With $100,000, the share price, and this is split adjusted. The price wasn't this in 2017, but it is split adjusted. That is what it would have been based on the split. It all works out the same. You have your shares that you have 13,106 shares you would have purchased with that, and that's your $100,000. Now, the first dividend, and this is not a dividend ETF. This is not a dividend growth ETF. This is not an income ETF. This is a growth machine ETF, but it still pays a small dividend. And even though it's paying a small dividend, don't let that fool you. There is some compounding that takes place from that, not as powerful in the snowball of the income, but in the overall portfolio, it does have an impact. And of course, the longer you let that carry, the bigger that impact it has. You can see the dividend per share was only 2 cents. It's not a big dividend. It's not meant to be a dividend, so you're not going to see any really adjustments taking place after the dividend payment. It's once a quarter on top of that. So you're talking 2 cents per share once a quarter. Quarterly, on this first payment, we got $222. That's not a huge amount. It's about $75, give or take. I'm just doing my math in my head here. About $75 per month that you're receiving here. Quantity, we were able to buy from that, though, 29 more shares because the share price is so low at $7.57. You got 29 more shares, and that brings your cumulative there. What we have over here is your total portfolio value. You can see just in these couple weeks it dropped slightly because the share price had dropped slightly. We're down, and that's what we're tracking here in O. Quarter over quarter, or from the last payment, whether we were up or down. And then in P, column P, we're tracking the total increase or decrease. This first dividend was paid. The portfolio balance was down $563. If you go to the second payment, we're going to fly through this here in a minute, but I just want to give you a little bit of background at the beginning here. Another 2-cent dividend, $262. You're able to buy almost 33 shares. The share price did go up slightly. The dividend amount went up a little bit. You do have a few more shares from the prior quarter. And you can see now with the new share amount, our portfolio balance is up to 105,000. From prior quarter here in O, we're up $5,600 from this amount, this prior quarter. Now in P, see, we're only up 5,000 That's from this original. So this is tracking from the original price, how far up or down you are. And this is tracking from the prior quarter. And you'll see in a minute why I'm doing that on this, to show you how to ride out some of the market turmoil that you'll face and how short term it often is, and why this is important to see in a long-term vision when you're investing. Let's go down here to December 12th. We got our final dividend of the year. It was 3 cents, $359. That's up by about $130 from the beginning, but that is per quarter. And the share price now has jumped up to $9.15. It's down slightly from the prior quarter, but from the beginning, you can see we're definitely up a nice little chunk here, and we still added 39 more shares this quarter, and that brings our total in the value up to $122,000. Now, I wanted to show you this for a reason here. If you're looking at this, what people tend to do is they look and say, oh, maybe from the last statement you get, you're down $13,629, and you're going, oh, the portfolio is down, we're doing horrible. But if you look next to it, yes, it's down from this quarter prior, but if you look next to it, it is still up $22,000 from its original price. Yes, it's down from where it was the quarter before, but that is part of what you're going to see. You see on this here, there's a lot of red, and it's not a lot of red. There's some red here scattered throughout because you have quarter over quarter, sometimes maybe even a year where it's down quarter after quarter after quarter. But if you look at P, other than this first one, 19 days after we bought it, it was down. It hasn't been in the red since. Let's look at this a little closer. Here you're down 13,000. Then the next payment is the end of December. You're at December 28th. It's the kind of January payment. They just paid it here at the end of the year. 2 cents. You have a $293 distribution. Share prices dropped a little bit more, and you bought 34 more shares. You can see now we're down to $114,000. Again, you get a statement that shows you're down almost $8,000 from the prior quarter. That's back-to-back quarters. Now, 2 quarters in a row, you're down over $20,000 from where you were just back in September. But look over, you're still up $14,000 from when you bought it. You want to keep that in mind as you're looking at this and you're getting concerned. And this isn't just with SCHG. This is going to be with any stock, any ETF. You're going to want to track this way. Yes, you're seeing where we're at the month before, the quarter before, the year before. But where are you at from when you bought it? And the longer out you go, you'll see how this impact of these quarter decreases is less impactful on your overall performance. Let's scroll down a little bit further. You can see, we'll come down here. You can see this share price started creeping back up. It reached its all-time high at up to this point, the end of 2019. Got a $323 payment. The share price was up to $11.31, so you're only able to get 28 shares. Where like up here, you got 41 shares. Here, you're only getting 28 shares because of that increase in the share price, and that brings your portfolio up to $152,000. Now, let's look back real carefully here. If you're concerned in real life back in 2018, you're going, oh my goodness, this is horrible. The stock sucks. I'm getting out of this. I'm bailing. But if you have a long-term mindset, you ride on this for a while. Look, you were up 18,000, 5,000, 3,000, 10,000, quarter over quarter, and then total from when you bought it, you're up $52,000. Basically, in 3 years, not quite 3 years, you've turned $100,000 into $152,000. That's not bad. That's a nice return. I'd take that every 3 years. I would take that 50% growth over and over and over. Wouldn't bother me one bit. But here we go. March, the next quarter, share price goes way back down compared to where it was. You buy some more shares, you get that, and look, you're down to $129,000. And if you're looking at your quarter over quarter, you're going, oh my gosh, our portfolio is down $23,000. This fund is tanking. We're getting out. Step back, take a deep breath, and look over here. You're actually up from what you have paid, $29,000. And be patient with the stock market. Watch what happens. Then we go to June 20. This is COVID, remember? Everything tanked. But then look, it reaches an all-time high. You gained 40,000 over the prior month or prior quarter. And look at the run it goes on in 2020. The share price goes up to 1368, 1544, 1590, 1803, 1918, 2057, 2063. And we're going to stop right there for a minute. Just look at that. If you panic because of this and you sold, you're thinking, oh, I'm getting out. This is tanking. What a horrible fund. Look at the gains you would have missed each quarter, 40,000, 16,000, 24,000. Your $129,000 in 2020 would have turned into $281,000 by 2021. That's a huge growth. It took off. Sometimes right after a dip, you'll see some of the greatest growth. And sometimes after huge bull runs, you'll see some massive declines. And that's what we see here. Look at this quarter. Now, again, you thought maybe you panicked here in 2019, 2020. Look what happens in 2022. It's down $33,000. $51,000, but you're still up $98,000 from when you bought it at $100,000. Yes, it's down from where your high was, but you're up almost basically 100%. You've basically doubled your money in those 5 years. And yes, it had a horrible 6 months there, and it came back a little bit. And it went down a little bit. You can see our share price went from $20 down to $18, down to $14. We may as well get out of this fund. It is just too tumultuous for me. It's too volatile. I can't handle it. What are your thoughts? Do you like when you see volatility? Because you know what I did right here? Right here. I'll tell you what I did right here. With this share, with this fund actually, I put more money into it because I saw this as a sale and I bought more. And guess what? I got the gains from this 956 up to this 2063. Sure, it dipped a little bit, but look, okay, let's go to the lowest it got here. It was at 1447 right here. If I bought it at the 956 range, let's just say $10, I'm up $4.50 per share just in that short period of time, even after it dropped drastically. But I didn't sell it. I kept hanging on to them. And now look at, as of September, and that's down a little bit, but it's pretty close to this now, up to $31 a share. From where we panic and think, oh my gosh, it's gone down to 1447. It's more than doubled in these last couple years. That's a huge bull run that it's been on. Now, did it have any turmoil in there? It's been pretty green here. Look at this positive quarter over quarter. Look at the gains quarter over quarter. Now this right here was a huge drop. That first quarter of 2025. A lot of turmoil, a lot of chaos going on. It dropped $56,000 because it went from $29 down to $25. But guess what it's done since then? This was its high, and now it's gone above that. Yes, in order to get to new highs, often the stock market takes big dips, and then it catapults back up. Not always, but often that's what happens. Seeing this in all this data, all this, look at that. You went up to $342,000 gain. In this 8.5 years, your money grew from $100,000 to $442,000. Now, you also, look at this here, you gained 800 shares, basically added 800 more shares. Your total value gain is $342,000. Your share price has increased 317%. Remember, it went from $7.63 up to $31.83. Still paying a 3-cent dividend. There's been a couple smaller ones there, but this has been just pumping and pumping on growth. There's been some dividends, but it's all about growth. Look at that growth. I want to show you this chart. This is what it's done. That chart we just looked at, all the numbers. This is where people are like, okay, things are fine. And then, they have these little dips here. They start panicking. This is where people freak out and sell. But then we had this nice growth here. Oh, we panic here. We sell. Then look at this massive growth. Look at this stretch from here to here. Your value went from $129,000 to $281,000. So maybe you were getting relaxed and think, okay, this is great. But then do you panic here? It drops from 281. You're looking at your portfolio, and then all of a sudden you look down here a couple months later and it's down to 202. Again, this is where people just panic. And this is going to be a time where a lot of people would sell out of this and just say, I am bailing. I can't handle this, because you drop from this 280,000 down to 200,000 and it just sank you. You just feel like, I'm out. And you then look at this loss of value increase you would have missed because you sold out of it. And again, we saw a dip here from 403 down to 347, a $50,000 drop in a quarter. And a lot of people will panic again and say, we got to get out. We got to preserve our money. Now you're up to new highs. And this is going to continue. So we put this out another 8 years. It'll continue, but it's going to end up higher than where it started. But you're going to go through some troughs to get there. What are your thoughts on SCHG? Do you own it? Have you thought about owning it? Why or why not? Leave some comments down below. If you like this back testing on SCHG, let me know if there's other funds you'd like to see, or if you'd like to see SCHG compared side by side to another fund, maybe SPY or some other fund like QQQ. Let me know. I'd be glad to do another video where I'm comparing two different funds. But I wanted to share SCHG. It's a quiet fund that a lot of people don't talk about, but it has had a very strong performance and has done really well for those who have held it. That's our video today. I appreciate you joining me. Don't forget to hit that like and subscribe button. It truly helps out the channel. And we'll see you next time on Simply Money.